Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 6:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 21st day of March 2025, and this is the evening report for gold and silver, our weekend review. Recent gains in gold have been driven primarily by concerns over President Trump's newly implemented tariff policies and their potential economic impact. The administration's aggressive trade stance has now materialized into substantial tariffs affecting three of America's largest trading partners: Canada, Mexico, and China. Over the last two trading days, we have seen real indications that gold might have reached a potential top. The first indication occurred 3 days ago when the dollar bounced off of a low that came in at 102.91, found support, and then began to gain value. The dollar gained 0.18% on Wednesday, 0.34% yesterday, and 0.33% today, taking the index from the lows to settle at 103.79. However, our first signs that gold had potentially hit a top occurred yesterday when gold traded to the highest value in history, basis the most active April futures contract that traded to $3,065.20. Gold would close significantly lower at $3,043.80. Today, gold opened at $3,052.60, closed at $3,021.40 after factoring in a net decline today of $22.40. Consider this: when we look at the rise in gold futures from October 2023, gold has gained a total of $1,058.70, which is an increase of 52.81%. Most noteworthy about this recent climb that began in the middle of December is how quickly gold prices appreciated, gaining 16.88%, a total from the low in mid-December to the intraday high that occurred yesterday of $442. And during that rise, gold would gain significant ground from 2620 up to approximately 2975 before having any major correction. In the case of this last top, gold would drop from 2970 down to 2839, roughly a 38% retracement. Which brings us to the most important question we can ask, which is if in fact a correction has begun and it will be deeper than the lows that came in today of $3,011, where could gold futures find support? The first logical level is $2,980. That is approximately at the 38.2% fib retracement, $2,953. That would mean that gold corrects by 50% from the low to the high, and an exceedingly deep but still acceptable correction would be if gold retraces by 61.8%. That would take gold to $2,927, which means that next week will be extremely interesting when we get more information as to whether or not gold will continue to witness a price decline or find support.
Unlike gold, silver declined this week by approximately 2.5%. At the start of the week, silver was able to make a higher high than it did last week at around $35. Going back to 2011 and 2012, we can see that this price point not only served as support. $35 was the starting point of one of silver's greatest run-ups. Switching over to a daily chart, we can see that the decline this week in silver really occurred over the last 3 days, with silver declining at an accelerated pace. As you can see on this dollar index chart, that is the opposite of what happened in the US dollar index. The dollar found support midweek and has been gaining strength for the last 3 days at an accelerated rate. One interesting fact about where the dollar found support at is it has historical significance. If we go back to 2017 and in 2020, we can see that that corresponds roughly with these two tops. Still, however, it is likely that the US will enter a period of high inflation and slower economic growth due to Trump's trade policies, so this support might be short-lived. Heading back to silver, we can see that the recent run-up has accounted for a roughly 50% retracement at the lows, and there's other technical studies that point to support coming in at this week's low, including the baseline of our Ichimoku cloud formation, and the close this week lines up roughly with our 20-day exponential moving average. So there is a possibility that we see support come in at current pricing, since we have already made a 50% correction of the rally that took place over the last few weeks. We will have to see how the start of next week plays out and if we get a pivot to the upside.
This has been Gary Wagner,
And Joseph Wagner,
wishing you as always good trading.
we'll talk to you on Monday for our next video report.
Bye-bye.